please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV-18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh, and with me Anuj and Surabhi. As always, the global markets are not helping very much, but really it is our domestic issue that may be a niggling botheration, and that is the GST tax collection numbers that we got yesterday, 10% lower than the run rate of the previous months. Definitely the November collection 10% lower than the October collections. Even if a little more is made up in the remaining days of November, this looks like a challenge for the government. It can mean either higher bond yields if they borrow, or it can mean a drastic cut in government expenditure in the last quarter. Again, that can be hurtful for growth. So overall, not very good news as far as the domestic market is concerned. It also hopefully doesn't mean lower economic activity. That would be an even worse deduction. Good morning, both of you.
Good morning, Latha. Yes, completely take the concern that you've raised on board. In fact, we will get down to the reasoning, because the Finance Ministry also gave a number of reasons why they think the October numbers were lower. We're coming back to that in just a bit. But first, the global cues that Latha also referred to. So Asia is very, very mixed this morning. I mean, the Hong Kong market is down a little bit. Shanghai is mildly negative. Kospi, which had such a rough ride yesterday, that's one index that's actually trying to sort of undo some of the damage. The net result for us is the SGX Nifty is down about 0.25%. There's no taking away from that. And the price of oil, that's the constant cue you hear us talk about every single morning. Brent is still close to 64, though there was selling in NYMEX crude yesterday because of more rigs being deployed in the US. But that doesn't help our case because Brent is still closer to that 64 mark. Anuj, good morning. Now, where does all of this leave us? Because yesterday, the second half, the last hour actually during closing, but it looked really, really promising. But again, the bulls are running into some of these headwinds today.
Yeah, morning, Surabhi. And, our market is correcting some of the underperformance. So as long as the globe is not collapsing, there's again a case that we may outperform because we had underperformed a lot. But this month has been bizarre. The Nifty is up 0.6%, and that after the last 8 days winning streak. But the mid-cap index is up 2.5% and is at new highs. But what is interesting is that the two largest component of the market, the Bank Nifty is up 3.5%, the IT index is up 4.5%, still the Nifty is up only 0.6%, which is really bizarre for me. That's because HDFC, Tata Motors, Larsen & Toubro, ITC, these kind of stocks have dragged the market. Let me put a complex technical term simply what today's trade setup could look like. Yesterday, the market made an outside day by a small margin. What is an outside day? When the high is higher than the previous day and the low is lower than the previous day. Now, that can be bullish or bearish depending on the way you look at the market and depending on the last 3 or 4 days of the market. Outside day with a bullish bar, when the last hour is really good on both days, normally means bullishness. It normally means that at lower level there's a lot of buying. So the broad thesis, as I mentioned yesterday as well, is that the correction is over, but the upside is capped for now. So what you got to do is the scavenging trade. If the Nifty opens at 20-25 point lower, once again it will be in that zone where you trust your instinct and you buy and you put previous day's low as stop loss. That trade would have worked yesterday. It should work today as well. Things sometimes repeat in financial market because the greed and fear factor remain the same. So that may happen in today's trade as well. At higher level though, once again there could be some profit taking because there's no macro trigger for this market to break out. Also, some shorts entered yesterday at higher levels, and that would happen. At higher levels, shorts would come, they would cover at lower level. At lower levels, longs would come, and they would cover at higher levels. So both buying the dip and selling the rally is working for now. But the larger texture is that the market has completed its correction, a shallow correction, and is now waiting for a trigger maybe for the next phase of expansion. So maybe that happens with Gujarat election or whatever. But breakout it will. The matter, it's a question of when and not if.
Sure. Okay, but actually the kind of stocks that rose in the last hour, including PSU banks, not backed by delivery. I mean, we don't have too much of delivery statistics, but at least in the PSU bank's case, it looked very unconvincing.
There's one more theory on that. Because yesterday, if you see the mid-cap index, let's just pull out the intraday chart of mid-cap index. It never got into the red. It was in the green through the day yesterday, and that's because you now have reached a stage where you believe that the market downside is protected. It may not have upside, but when the downside is protected, you normally go out and buy mid caps. And PSU banks mostly are in that category where you buy for the day, and you don't really care, what will happen next day. So you square off by the end of the day. So that's why the delivery volumes are low in PSU banks, even on good days. But
no, I mean, I saw Dena Bank rising 2% in last hour.
It will happen.
So it was a little unconvincing.
Yeah, it will happen. In mid caps, it will happen, but that should not mean that the market is at risk or the market is vulnerable.
Yeah, actually, there were a couple of stronger stocks also moving higher today, the likes of Leyland, Titan. Even they found plenty of buyers. So it was an interesting all-in-out mid-cap market action yesterday. But coming back to the big story, and that is, how is the GST kitty now looking? If October numbers are anything to go by, not a good feeling, because it's the lowest number since the tax actually rolled out at 83,300 odd. Now, Latha, coming to the explanation that the Finance Ministry is giving, one, they're saying that anyway, some of the GST tax rates slabs themselves have been lowered, and this is without factoring in the November reductions. So I'm wondering what happens there. But your understanding of the slightly complex math that they gave on this IGST bit and whether that makes sense?
It's not really that complex. You know, the IGST in the initial stages included, even if you, for instance, Godrej transferred from Maharashtra to Gujarat, so even if it was intra-company, they were charged IGST. So the explanation of the government was, in the first 3 months we taxed, and then we allowed that to be taken as credit. So you didn't have to pay CGST and SGST in the subsequent months because you had already paid for intra-company transfers. So part of that is, that kind of tax. If that is true, then that 95,000 crore was exaggerated because it included intra-company transfers as well. So the run rate was not 95,000 as we thought it was, or 92,000. It more likely is probably, 85,000 or thereabouts. So it's possible that's the explanation, but that doesn't answer the fact that we are running short than what the estimates of various GST calculations were. It's not very difficult to make a GST calculation, because what you do is you take all the indirect taxes of the previous year, assume a 14% growth, and expect that that should be what we should get. So we are clearly falling short of that level as well. So my big worry is also the second part. Look at the percentage of taxpayers in lakh. They were paying, about 58 lakh guys were paying in the initial months, and it's dropped in October. Now, one of the explanations we got is that initially it was very difficult to do nil tax. That column was not getting, uploaded. Now the system has stabilized. So maybe the remaining are nil tax guys. So who are now able to pay, show nil tax. So we don't know, it's not looking very, the explanations we got both from the government and from the tax experts did not indicate that we are going to make up the shortfall in the subsequent months. So my big fear is that either the government will cut expenditure because they want to remain true to the 3.2%, or they will have to borrow a little more. In either case, immediately there will be a negative reaction.
And that yield is so stubborn at 7.05, simply doesn't budge, doesn't move.
Actually, to be fair, I don't think it will go much beyond 7.05. The bonds have been oversold so much, and banks are still flush with cash. So, I mean, it will go up maybe 06, 07, but not much from here on.
Okay, well, that is GST. We will keep an eye out on all the commentary that's coming from North Block on the numbers as they add up. Right now, it's time for the equity calls of the morning. So Neelkant Mishra of Credit Suisse says, reported October GST collections fell much short of their estimates of the seasonally adjusted revenue neutral threshold. But he says additional disclosures suggest it may be early to panic about fiscal health. He says the number of filings was higher than at this stage in prior months, but 15% lesser than the 5.9 million that July-August ended at. Neelkant says this release is likely to add to the fog on macroeconomic parameters in India. He acknowledges the uncertainty but remains comfortable with the aggregate collections of GST. He says at this stage, the allocation of center state allocation issues are less important. Also, we must keep in mind the fact that everything is right now based on guesstimates. People's own calculation of how much tax they need to pay, how much input credit they can charge, because the entire GST mechanism, I guess, is still not up and running. So it's very, very...
Yeah, it is self-declaration, but it will take a long time for the administration to come back with its eBay bills and GST 2 and 3, which automatically match.
Form matching.
So that might take a long time. So we have to do with self-declaration for longer. And therefore, there is no taking away that the government is getting less money than it had budgeted for. Okay, some money market views from Bhaskar Panda of HDFC Bank. He says the dollar has been languishing for some time now, and yesterday was no different. Says the index is hovering below 93, actually well below 93. He expects the rupee strength to continue, and he expects the USD INR pair to trade in a range of 64.45, 64.65 today. But I'm more curious about the bond call. He says the 10-year benchmark bond yield has remained elevated above the 7.05 mark. Says today may be no different as the yield continues to consolidate within 7.04, 7.07 range. I seriously don't expect it to go beyond that.
Okay, over to Mangalam now for the world view.
Well, a mixed finish on the United States of America. All the three indices, the Dow just a few points away from yet another record close as well, but still closed with a mild green. What did well in the US were all the retailers continued to surge for the second day in a row. We got good green signs coming in from Macy's, Kohl's as well as Gap. Adobe Analytics report indicated that the Black Friday sales this year was up 17% year on year. So that is positive as far as consumer sentiment is concerned. But across the Atlantic, sharp red cuts in the European markets, all of them down at least around 0.4 to about 0.5%. If you take a look at the banks in Europe, they lost in trade because Switzerland's biggest bank, Julius Baer's CEO, resigned. The euro too hit a 2-month high versus the United States currency dollar. If you take a look at the peripheral markets, the Italian index, that one was the only one which outperformed, rather underperformed with a cut of 1% as against the ATHEX as well as the IBEX. Red on the emerging market screen as well, Russia as well as Brazilian indices. But Asian markets, they recovered. The Nikkei and the Kospi, after opening in the red, moved higher and have moved into the green. The SGX Nifty still indicates a mildly muted start with a cut of almost 20 points.
Okay, all right, Mangalam, thanks very much for that. So global cues not really absolutely in favor of the bulls. Some important observations coming in. Those are USFD observations on Glenmark. Slightly lower on the SGX Nifty. Let's pull up that index. Yeah, okay, so it's recovered a bit from the lows, but 22 points down is what it is telling us. So let's now talk stocks. Our entire team is here as always with the CNBC TV-18 morning top 10 list. Good morning, guys. Thanks for joining in. Anuj, let me start with you as always. What's it today?
So one index stock and one non-index stock. The index stock is UPL Surabhi. It's a stock which had a strong bounce from 20-day moving average. It was in a big bull market till its results, and after the results, it's corrected quite a bit. Even though the results were good, the stock down about, of course, 16% from peak. So that's the first stock to watch. The second stock that I'm watching out for is Tata Investment. In fact, that's a stock which was first flagged up by Varinder. But it's a stock which is trading at over 60% discount to its investments. And what's been really interesting is that over the last 3 months, all the Tata Group stocks have had huge rally, and it's lagged the stocks of its big investment. In fact, it has other stocks as well, apart from Tata Group stocks in its investments. So yesterday, there was an interesting rally in the stock. I think that will be the stock to watch out for.
Okay. Well, thanks for that, Anuj. Maybe the GST impact will be felt on bond yields, and maybe that will be a little negative for NBFCs and bonds. But, well, I'm not very sure. My own sense is that bonds have fallen enough, and therefore it could be actually a marginal impact. I think the bigger impact is going to be on real estate stocks, because Business Standard reported this morning that any builder with unsold realty will be taxed on that unsold inventory. Our real estate expert, Manisha Natarajan, has joined us on the phone line. Manisha, first of all, I assume this news is correct. And secondly, who are the guys with maximum unsold inventory?
You know, Latha, I'm just wondering how will they tax a real estate market which is already very, very slow? There might be some deliberately held back inventory, but only in the premium segments, or in fact, I would call it luxury segments in the markets of Mumbai, Gurgaon, and Bangalore. It's very hard to say who's deliberately holding back inventory, but it's very, you can analyze and say it has to be only in the luxury segment. To me, it seems that definitely DLF is holding back. They have said it very openly. They do not want to sell inventory until it's complete, and they will hold back inventory till March. When they talk about cartelization, again, we all know that DLF has a history of buyers taking it to the market, so to the commission, competition commission. So my sense is that there could be a very few premium and luxury developers holding back, but in a market where you have 11 lakh plus unsold inventory, developers are desperate to sell. In fact, even in the luxury and premium market, they're sitting across the buyers and negotiating deals at very reasonable prices. So I'm quite surprised. It's going to be extremely tough to tax unsold inventory and prove what is deliberately held back and what is actually not finding any buyers.
You mean builders? Are you saying builders will be able to get around by saying that this is unfinished stock and not unsold stock?
It's going to be hard to do that because, yes, if they do not apply for an OC and keep it holding, they do not do the last bits of work, they could try and get around this particular rule if it does come through. But my sense is that there is not that much inventory where developers are actually holding back. Who has the holding power, Latha? It's important to understand that developers get money to construct at a very high cost. Very few really have the holding power. And corporates like Tata's and Godrej do not play this game of holding back inventory. They find buyers very quickly as soon as they launch a project because they are branded projects. In fact, Pirojsha Godrej has given interviews across board talking about how well his NCR project has done because it was rightly priced. So it seems to me, I know for sure that DLF definitely is holding back, and they've openly said we do not want to sell until unless the flats are totally ready and we get the right price.
Okay, Manisha, thanks.
They are also increasing.
Okay, thanks very much for giving us that context. Now, that's the one stock that's actually run up 110% in the last 1 year. So now sentiment negative. Let's see what happens today. But let's move on. There's a Motilal Oswal note on gas stocks, particularly city gas distribution companies. Varinder, welcome back. What are they saying?
Well, thank you so much. The gas space, as flagged off by Nimesh also after the Motilal conference, this is one space to watch out for, just because, there is a, compounded growth coming in from this space. You don't see any problem in that space. The first note, of course, comes on IGL. IGL is one of the strongest because there is a lot of government push which is coming in Delhi, which is not in Mumbai or even in Gujarat. So for IGL, they have upgraded the stock at the price of 404, which means 30% upside from the current levels. Again, volume will be 11-12% going ahead. EBITDA CAGR of 14%, EPS CAGR of 14% over the next 3 years. Gujarat Gas is an interesting stock. This stock, people are betting on the Morbi division, what they have, and they're expecting that 6 MMSD volume will be coming in from there, currently 2.7. Important is that the EPS growth for Motilal, they mentioned that it could be 40% over the next 3 years for Gujarat Gas. Hence, they have raised the target price to 1,011 from 721. This is the sharpest increase in terms of the gas, city gas distribution companies, what they have done. On Mahanagar, Mahanagar is a different scenario compared to IGL. Again, just because of the government push is not coming as much as in Mumbai compared to Delhi. And of course, people are waiting out for more and more new geographies to add. Raigad was added recently, but the PNGRB bidding round is important to watch out for whether they get more and more, volume for a new distribution centers or not. So, the EPS CAGR for MGL is the lowest at 7% for the next 3 years. But they have initiated the coverage at a price target of 12.19. So, strongest being IGL as it is always. Gujarat Gas is important, new one coming in, and of course MGL.
Okay, Varinder, thanks a lot for that. IGL, a stock which has made lifetime high every month for last 18 months or so. Just been a phenomenal stock. But let's move on then. Nimesh, of course, broke the news on PNB selling the equity in PNB Housing via OFS, and that's happening today, Nimesh.
That's right, Anuj. So, PNB is selling 6% stake in PNB Housing via an OFS today. The floor price is 13.25, which is a 5% discount to yesterday's closing price. So, and with that, PNB will raise close to 1325 crores. Even after selling the 6% stake, PNB will continue to hold 32% stake, valued at close to 7,500 crores. So, for PNB, it's a marginal green because it's an indication of monetizing of their assets. So that will react in the green. A tick red for PNB Housing Finance because of supply overhang and the fact that there is a 5% discount in the OFS, so that will react negatively. But for PNB Housing, the street seems to be very bullish. The growth seems to be very strong for PNB Housing, and in fact, IFL recently had initiated a coverage with a target of 1,700. So maybe this fall, because of the OFS overhang, will be an indicator to buy into that stock. But at least for today's trade, green for PNB and red for PNB Housing.
All right, thanks a lot for that, Nimesh. It's over to Ekta. Ekta, while you will be telling us about Eris Life and Aurobindo, I hope you also saw the lines coming in on Glenmark.
Yes, absolutely, Latha. Well, I was the one who actually got the 483.
Congratulations.
No, as in, I did manage to go through the 483. It's around 11 odd pages, and it is the buddy unit which was inspected by the US FDA from the 6th of November to the 11th of November, and they were issued 7 observations at that point in time. So I think the number is going to really, shake the street up, despite the fact that the buddy unit is only less than 10% of total sales for Glenmark. And remember that Glenmark has quite a spotless history when it comes to compliance. So when you hear about 11 observations coming through, it will shake sentiment up for sure. Now, I just want to point out the observations, which also includes the first one, which is basically failure to thoroughly review any unexplained discrepancy and failure of a batch. Now, remember that this observation, though it is limited to Glenmark in this 483, we have seen this kind of observation come up for many other companies in the past couple of months. So it would be something that we should note and keep track of. Other observations include lack of written procedures, responsibilities and procedures applicable to quality control not fully followed, etc. So so today, for example, we would see Glenmark in the red on account of this, but how they treat the 483 and how they reply to the US FDA and how successfully they can resolve the issues would be something that we would need to monitor closely.
Okay, Ekta, so that's Glenmark. Let's also run through the other 2 stocks. Aurobindo had a small US FDA inspection of one of their units.
Yes, absolutely, which was in fact completed last week. So their Unit 10, which is a fairly new unit for them, they're not yet supplying too much to the US, or they're not supplying anything to the US from that particular unit. So it was probably a pre-approval unit inspection which took place from the US FDA, ended last week with nil observations as per my sources, but the company hasn't confirmed. And for Eris Life, I expect the stock to be in the green because Credit Suisse has initiated with an outperform rating and a target price of 770.
Okay, that's important.